The orbit, it is Tuesday, June 25th. We have the SPX up slightly. That's a little bit of a recovery from a fairly volatile Monday we saw yesterday. We talked about this a little bit last week. That was a big expiration on Friday. That was not only a monthly expiration, but the quad, triple witching type expiries where a lot of options positions and futures positions rolled off. And that doesn't necessarily mean that you're going to see a lot of volatility coming out of that, but the conditions are there that if the market wanted to make a move, it could more easily than the week prior after all of that gamma rolls off. And it takes a couple of weeks for that to sort of reestablish itself sometimes. In this case, we might have seen a little sign of that new environment, that new gamma backdrop yesterday when we saw some of those big moves intraday. And you can kind of see that on the chart. If we go back to the close yesterday, you saw this, steep decline into the close. You saw a lot of volatility in during the day, intraday. The market had actually gone to both extremes of the expected move yesterday and a little bit outside the expected move yesterday. So something to be aware of if you're trading, especially if you're selling condors, if you're selling credit put spreads, if you're selling credit call spreads, something to be aware of. And then also, obviously, if you are day trading, you might see a much more rapid move over a 10 to 15 minute period than you have over the last couple of weeks where we've just sort of been in a slow grind higher. Speaking of that slow grind higher, if we go to the 1 month chart on SPX, we can see that this is the first little bit of volatility that we've seen besides upward volatility, where we've seen some gaps higher on some of this positive inflation data we've seen over the last month. But as you can see, it really going back, this is the first bit of volatility we've seen in probably at least or about a month at this point. Whether it continues or whether that was just a 1 day or 2 day hiccup remains to be seen. As far as the rest of the week, we've got an expected move in SPX of about just under 1% into Friday's close. And as you can see, that's quite low volatility. That's 12 IV coming in even closer. Today's 0 DTE IV is about 15. That gives you about a 0.3% expected move for the rest of the day. And then you see 11, 11 IV, and then 12 for Friday. So pretty tight, pretty low IV. If you are a premium seller, perhaps you look for those big down moves intraday. You'll see a little bit of an IV pop on moves like that, and perhaps you're legging into credit put spreads, credit call spreads. As far as directional plays, let's just go to sort of QQQ because that's interesting with what's going on in Nvidia and some of these stocks. We've got pretty strong first 45 minutes of the trading day, and we're up about 0.8%. And for the rest of the day on 0 DTE on Qs, we've got about a 0.5% expected move and about 23 IV. So the IV is popping a little bit in Qs. If we go out to the end of the week, you see this 18 IV and about a 1.3% expected move. That's a little bit higher than we've seen recently. Going out on the chart, you can obviously see what Qs have done. We've had this monster rally from those April lows, and we're up about let's call it 13% right now. We got almost about a 15% rally there. Plays, in some of these indices or in individual names, you can see, perhaps you'd want to catch if you were bullish in the tech sector. If you're bullish in Qs or any of these individual stocks, perhaps you'd wait for a slightly more significant pullback here. And of course, if you were bearish, you have pretty low IV going out through the summer. IV doesn't really pick up until you get out into the fall and the election season. Go to Nvidia real quick because this is obviously a widely held and a widely traded stock. And then after the 10-for-1 split, there's been, the option volume in Nvidia is really insane. And let's say you were bullish in Nvidia and you were looking for a pullback to perhaps buy more or to buy into the stock. On some of these days where it's up, this isn't a monster rally considering how much it's been down the last couple of days. But perhaps you look on these charts to see, where would I be a buyer in Nvidia? Is it 105? Is it 100? Even if it's 115, and you can sort of protect and set up for a move like that with a put spread. So let's say Nvidia was 120, bounced to 125. You were looking to be a buyer more at 110, and you already own the stock, let's say. Buying a put spread down to that 110 level gives you that ammo if that move does happen. If you don't have any position and you're looking to get into an Nvidia move, one of the things that will happen in a stock like this is, the volatility will spike on some of these moves lower, and it's a chance. And people are generally buying upside calls. Retail are buying out of the money calls in Nvidia. So you get to, let's say you were a buyer here at 121, just going out on the 1 month chart, and let's do a call spread right here. You can see, let's go out to, let's take it to August 16th. And as you can see, your short call is up at the prior high. Let's get in here. Where the short call is at 140. The long call, let's just make this a 120, 140 call for the simple math. Risking about 680, 700 to make up to 1300. And that break even of 126, we just saw that yesterday, really. And that's one way to position. Not that this is the spot to do it, but let's say if you got another chance to get Nvidia down in the teens and you were bullish and you're waiting for that 15 to 20% pullback in the stock, this gets you that lower break even than just an outright call. And then, of course, you are selling to those people that are buying those 140 calls, and you're selling to them at a pretty high volatility. So that is one way to initiate a bullish Nvidia trade. And of course, if you are long this stock, look for those rallies to put on perhaps a put spread hedge. And a good rule of thumb there is to set that put or set that put spread so that the spot that you would, honestly on that chart be a buyer is a good spot to do that put spread down to, because that will give you that ammo at that point to actually do what you intended to. A lot of people say they want to buy a stock like Nvidia if it pulled back 20%, and then it pulls back 20%, and they're sellers of their stock because they're sort of panic sellers. Put spreads are, hedging Nvidia all the time is probably a waste of money because it keeps going higher. But it does pull back, and when it pulls back about, the last one was almost 20%. And considering the run it's been on, if you own some shares and you want to buy more shares lower, that put spread gives you that ammo so that you are actually a buyer down there.